I'm Corbett Wall with DV Auction, here with your feeder flash for Friday, July the 17th, brought to you in part by Zactran. Treat your cattle with one cost-effective dose of Zactran. Zactran pounds BRD. Remember to observe the 35-day withdrawal period after treatment. For more information, talk to your BI representative or go to Zactran.com. I don't want to shock anybody because this news is pretty fresh, but today here on the feeder flash, we're remembering John Joe Curran, who passed on Thursday evening there. And John Joe was an order buyer extraordinaire. He was one of those guys that had bought more cattle than most people have seen. And I didn't know John Joe well. I went to a lot of the same sales he went to for many years there in southern Iowa and northern Missouri, but he bought a world of cattle, bought cattle for a lot of those farmer feeders in the Corn Belt there. He and his brother started the Russell Livestock Auction there in Russell, Iowa, and then he left and started his order buying business and was very successful with that. Bought cattle for a lot of cattle feeders and a lot of bigger outfits too, but we just want to think about John Joe here. He was one of those guys that was always in a pretty good mood, always kind of had a smile on his face, and we're going to miss him. And I guarantee you those southern Iowa, northern Missouri sales that he frequented are definitely going to miss John Joe Curran. Your ag commodities were pretty much higher straight across the board on Thursday. It didn't matter what it was, whether it was grains or cattle. Hogs were up big. Everything was up big. Nobody's really sure why, but sometimes that happens. But your live cattle contracts were up big. Feeder cattle especially up big. And we're just wondering really how come we're seeing all this come in. We've seen the prices get higher in your cash markets, and we would think that maybe these grass yearlings that we're selling are raising your index levels, which they are, but they can't keep up with the feeder cattle board for August. It's already up there pushing towards 143, and as high as some of these yearlings, these green grass yearlings have sold here in the last couple of weeks, and on our 7-day moving average, our index levels have jumped a bunch, and they have for the last couple 3 weeks, but they're only at 135.5, so they can't keep up. And your fat cattle market is all the way up to 103.25 on the board. Of course, that's looking at August, and I mentioned there when we started, we lost June and moved in here to July. It's one of those bastard months that doesn't get traded. So your fat cattle market and your nearby live cattle futures month don't really have to have anything to do with each other. They can jostle that thing around one way and then the next for a long time before it ever has to meet up, and it seems like that's kind of what we're doing. But these cattle feeders that have cattle to sell, not only are they not happy with the price they're getting, they're working with a negative basis here because the board's so much higher than what your cash market is. You know, if you're in the southern plains with 95, you're likely losing a little bit of money on the cattle, and then you're losing another $8 on your hedge. And that's making them resist a little bit. But they know that if they get an opportunity to sell cattle that they know are market ready, they have to take that opportunity because they may not get it again. And your cattle feeders are completely at your packer's mercy. They don't dare say anything bad about them. You never tweet or post anything on Facebook bad about them because you'll get called out. The retribution is terrible. They don't dare turn a bid down if they get one. If the packer buyers are willing to schedule their cattle, they always take it. They don't ever bristle up. We know that the supply outweighs demand. And we also know that if the packers decided that maybe they only wanted to give 50 cents for cattle instead of 95 to $1, that there wouldn't be a hell of a lot we could do about that either. So we're just kind of caught right there. But I tell you what, these guys are not real tickled because they've got margin calls coming in because the board's been up so big if they've taken a full hedge there. And it's really starting to to make it miserable for them, even though it's normally good when the board goes up. You think that's good, but why is the board going up? You know, the board doesn't just go up. There's people buying those contracts that are making them go up. Well, we talked on our last visit, it's likely not people, outside investors, because they don't have a lot of faith in the industry. They're not stupid. They buy beef too. They saw what went on in your grocery stores. They saw how the gouging went on. They noticed that the fat cattle market didn't go any higher. And so it's not them that's doing it. It's likely not long hedgers. There could be a few there, but we wouldn't think there would be many long hedgers on there, because you just don't see a whole lot of that anymore, even though we know that there are people out there that are going to have to buy cattle in that market down the line. So they want to take advantage of any gains in the market, even though they're going to have to give more for them whenever the time gets there. But long hedging is not a big thing anymore. And I touched on it on our last visit. It's most likely some of these bigger outfits that have been buying a lot of cattle for future delivery. They've been buying a lot of these green grass yearlings that are going to go on feed. And the pool is very shallow on these ag commodities right now. When you talk about ag commodities, any kind of a publicly traded market, your cattle are some of the most shallow that there are, as far as the number of contracts that are being traded. And it's not that hard for a big outfit to run the market up, just so they can lay those cattle off. They bought those cattle betting on the come. And the market was not to where they could hedge them, so what the heck, that we got enough power. They could pretty much throw a dart at a bunch of numbers and make your futures, your cattle futures, whatever they land on. It's just run it one way and then the next. They can do that. They've got enough corporate partners, they can do that, they can push it. Some of your big time market analysis people then have been talking about how bullish this thing was going to be, how bullish it was going to be, trying to get some other people to join in and help them run it up. And that's kind of what's happened here, and the market's better. And so we can't really complain about that unless you're a hedged feeder and you're making margin calls and you're still losing money on your fats. It's not much fun there. But you know, talking about how the packers really take advantage of the situation right now. We really haven't seen any official packer response to the big minimum negotiated trade push that we're seeing, the 50-14 bill that Chuck Grassley has put on there, and John Tester has also signed on, and some of your other major senators from ag states have signed on too. And we've getting, I've talked to you about how we're getting resistance there from the Senate Ag Committee Chairman and Pat Roberts from Kansas, and he does not want to open that up for discussion or a vote. So if we can't get a hearing on that bill, you know, and it's really frustrating, Chuck Grassley and some of these other senators that would like to get something done here. But it's just not happening right now, and they're about to play some serious hardball on here because Pat Roberts is a lame duck, and he's just sulling up and fighting this deal. We've already heard that he has a very close aide that is in a relationship with a big-time lobbyist there that works for the Packers, and I tell you what, it's about as dirty as any of those swamp deals that you ever hear of. But the heck of it is, you know, he can just say that he's listening to, you know, the big industry spokesman, which is supposedly NCBA, and some of your Southern Plains state affiliates, which they're fighting it too. Why? Because they're more tied closely to your Packers and to the relationship that the big corporate feeders have with the Packers than they are your producers and your smaller feeders. And I've told you guys many times, this minimum negotiated cash push here is more for your cow-calf producers and your backgrounders, your cattle growers, than it is the cattle feeders. You know, your cattle feeders, you know, they buy cattle, little hedge, they hedge the cattle, they sell feed, they charge yardage if they're running a feed yard, and as long as the feed yard's showing a profit and the cattle wash, what the heck, they keep doing that. But if we continue to see vertical integration and we continue to see fewer and fewer players in your cattle feeding game, then you're going to have fewer buyers of those yearling feeder cattle, and which is really going to hurt. And then when you got fewer buyers of those yearling feeder cattle, you don't have any demand to get the big prices for those. Who's going to give the big prices for the stocker calves? And so that's what we're trying to push for. But we haven't really seen a packer response to that. You know, they just act like, oh, you minions down there raising these cattle, you guys are so far down there, we can't even see you down there. You just look like ants, you know. We're huge corporates up here. We're feeding the world, you know, and all this kind of thing. And they haven't really made a response. But if you just watch their reactions, you can see it. Okay, so ever since we've got into the big push on this, and you guys know that I'm not as passionate about the 50-14 as I was the 30-14, because I thought the 30-14, or I still think it, I know it, that the 30 minimum negotiated cash trade of 30% per major packing plant would be enough to get what we want. And it wouldn't completely upset the apple cart, especially in the Southern Plains, because there would be room for those corporate formula arrangements, and it wouldn't reinvent the wheel. But you know, we couldn't get any buy-in from your Southern Plains feeders or your Southern Plains associations, cattle associations, so they just resisted it altogether. Well, your Midwestern guys, the Northern Plains guys, they already had policy for 50%. Why would they want to lighten it? You know, they're selling the lion's share of the cash cattle anyway, historically, and they've got the best cattle. And so you're seeing these people that don't want to change anything, and they don't want to see minimum negotiated cash trade. They're saying, well, there won't be any room there won't be any encouragement for raising better cattle, feeding better cattle, because we won't have any of these markets based on quality, and that's total bullshit. Because the places that sell the most negotiated cash cattle now are the places that have the best quality cattle. Those packers can bid those cattle up anytime they would like to. Yes, they don't do it, but they could do it. And so what's the packer response we've seen here from about the midpoint or from the climax of the COVID until now, and we're still going through the COVID, and it's miserable and looks like it's likely to get worse than better. But what are your packers doing? They're buying a lot of negotiated cash cattle. Why are they doing that? To kind of show, so they can send their people in there, their economists that are going to go in there and argue against the 50-14. They can say, well, look, we've had all this negotiated cash trade, and it really hasn't helped anything. Well, anybody that's feeding cattle knows that we've got an overwhelming abundance of market-ready fat cattle, and we've been backed up here due to the closures in the plants during the COVID-19 deal. So your packers are not willing to grid any of those cattle that they normally would grid, and your guys, especially in the Southern Plains, that have cattle, and they typically have the same kinds of cattle ready all the time. They either buy the same kind of cattle or they raise the same kind of cattle. They want to grid some of these cattle, but they can't do it. And the cattle that they want to grid, the packers will not grid and are telling them cash only. So if they're just cash only, you know, you would think, well, that's going to help the negotiated cash push. Well, that's not the way it's working, because they can't really negotiate. It's cash, but it's not negotiated cash. It's just, here's a cash bid. You either take it or leave it. And the guys, if they want to get their cattle scheduled, they take it. So, you know, I was talking to some guys there late this week that are saying, you know, I want to grid some of these cattle. They won't accept any grid cattle. They're telling me cash only. And that is their response to this 50-14 push. And it's not an official response, but you just watch these packers. You watch what they did when the DOJ finally come in there. P&S doesn't scare them at all. After the Holcomb fire, we sent the P&S in there. They said they went in there. Who knows if they even showed up. They probably fell asleep under a tree at a roadside park on the way to the plant. But DOJ came in there during the COVID to investigate the gouging, and those guys mean business. And immediately you saw a response from your packers. They started giving those token prices out there and started paying a lot more than they really had to, just to kind of get everybody off their back. Now we've gotten down here where they're not giving these big inflated bids on these cattle. They were down here closer to the market, and now they're starting to give a response to this push for the negotiated cash. So they're saying cash only. Yeah, you guys take that. How you liking this cash deal so far? But it's not negotiated cash. It's either take it or leave it. And so we've got market takers instead of market makers, and we want that negotiated minimum. So we have numerous packers out looking to fill that amount of negotiated cash that they have to have in each plant. Whenever they get in there and they all have to have them, then they will start competing on those cattle. That's how you get prices to increase, is competition. You guys know that. Let's talk about the board. On Thursday, August live cattle futures up $1.97 at 103.27. October up $2.05 at 106.60 for fall. You guys really think as we work through all these 700,000, 800,000, million head of backed up fat cattle that we're going to increase the market that much? I'd love to see it. Let's see if it happens. You're going out front there on your live cattle contracts, up 67 to up 192. August feeder cattle up $3.17. Wow. Where is all this push, you know? Well, from some of these guys that's been buying a lot of these high dollar calves, and you know, they're going to run it up and lay them off, I guess. But 142.60. September up 320 at 142.75. Go on your out front feeder cattle months, up 67 to up 270. Fat cattle trade through Wednesday, they'd sold 65,400 head negotiated cash in the 5-area feeding region. On Thursday, had a little bit more cleanup, not a whole lot more, and some of you guys resisting those bids, especially in the Southern Plains, mostly at 95, because of the negative basis that they're having to work with. And I tell you what, it's costing them a lot of money, these guys that are having to sell cattle. But it takes a lot of guts to turn one of those packers away whenever they give you a bid and offer you to schedule your cattle in. So, you know, that's what the guys are fighting out there. They would like to stick their feet in the ground and hope for a better price, get it closer to what the board is. But there's somebody right down the road that would be glad to schedule some cattle that they've got backed up that are weighing 15, 16, 1,700 pounds, and they'd be more than happy to take their slot. So that's kind of where they're at in the Southern Plains. Northern Plains, they're a little more current up there because your packers were up there picking around buying those because there was more cash cattle out there, and they were resisting the formula cattle that are coming back costing them more. But Iowa, 1,700 head confirmed on Thursday at $1 a pound live, and 157 to 160 on a dress basis. Iowa's running way ahead of everybody else. Nebraska, about 1,500 head. No live sales confirmed, but dress sales 157, 157 and a half. Those would be some higher, slightly higher, firm to slightly higher. In the Southern Plains, it's just steady. Kansas, 1,800 head, 95 to 96 live. Texas, just 600 head at 95. Box beef cutout values were actually steady as you'll ever see them on a daily movement there, but they seem to have stabilized here with your choice cuts just around $2 a pound, $200.80, up 4 cents, and selects down 7 cents at 191.30. We've got movement of 172 loads of cuts, grinds, and trimmings on Thursday, which is pretty decent there. Your slaughter is starting to be a little bit disappointing. We thought last week that we had a larger slaughter than we did the same week a year ago, and that's the only time we're gaining any ground, guys, is if we did that. But anyway, they ended up, because of a walkout they had in a Colorado plant, they ended up not having the Saturday that they had hoped, so we didn't end up eclipsing the year ago harvest. So, and now your packers, you know, they're not doing all that great. The packers are only making $300 to $400 a head on these fat cattle, which you think, gosh, I'd love to do that. Well, they were making $2,500, $2,600 a head here several weeks ago when we were in the worst of the pandemic. So they're not all that crazy about it. They don't want to fool with these guys. They know that if they get real disciplined and just kind of sit back, they're going to get the cattle anyway. So why push too hard? Well, so we're likely to see them pull back on that, and it's going to make the problem worse that a lot of people are pretending that we don't have. But those cattle did not disappear into thin air, guys. Slaughter, 470,000 through Thursday. That's 4,000 less than last week. 16,000 less than the same week a year ago. And who knows, guys, if this COVID deal continues to get worse and worse and worse like it is everywhere, you know, if we have another one of these outbreaks in one of these plants, oh my gosh, here it goes again. But your actual slaughter information for the week ending July the 4th come in, and your average dressed steer carcasses still way up there, almost 900 pounds, guys. 896, your average dressed steer carcass. That's 35 pounds per carcass larger than the same time a year ago. Let's talk about your feeder cattle market. Your real-time index on DV auction late in the day on Thursday sitting at 135.54, up $1.12, and cattle were bringing more in your auctions again. They needed to bring more to catch up with what's been happening the last week, and then with the board up big like that, they were up even more. Let's talk about your big sales there. Farmers and Ranchers Livestock, Salina, Kansas. Mike Samples and Company there, 3,400 head there. Feeder steers $2 to $8 higher. Feeder heifers $1 to $3 higher. Look at this automated market report on Cattle Market Central through DV Auction there. 311 head of the 6-weight steers, 640 pounds on the average, with a weighted average price of $153.35. That's up well over $5 on the weighted average compared to a week earlier. Now look at these 7-weights, and that's the big push on the 7-weights, and the guys to the north are really pushing on the 7-weights. They have been all week long. They'll eat more of that corn and add more value to it, and that's what they want. 521 head of the 7-weight steers, average 745 at 145.42. That's more than $10 on the weighted average higher than the same weight group a week ago. That is huge. 475 head of the 8-weight steers averaged 844 at 136.62. That was up $5.30 there compared to the weighted average from the week before. But a lot of cattle moving in Kansas. Going to be making a trip, a contact trip next week out to the Kansas Flint Hills. Been invited from a couple of my cattle buying buddies there to go along on some deliveries there in the Flint Hills. And that Flint Hills is one of the coolest places in the world. And really looking forward to going up there and visiting with them and going on some yearling deliveries with them. How about Pratt, Kansas on Thursday? 2,500 head, $1 to $5 higher in the sale barn there. And look at these loads of 8 and 9 weight steers here. These are loads out of Pratt, Kansas, winter livestock there. And look at the last one there was a stick out deal. 62 head, 853 pound steers, bring $139. I heard of a country sale that I want to talk about. My friend Jim Felton up there with the Felton Angus Ranch out of Springdale, Montana. He sold a big load of grass steers that he had turned out, and I actually was with him back this winter whenever he bought those. It was kind of a buying back some of the cattle that were influenced with his bulls. And so he was delivering bulls to a guy. Guy had some steers there he kind of wanted to sell. And Jim bought them and turned them out there on grass this spring, and pretty nice big load of steers. Got them turned out at Big Timber, Montana up there, and sold a big heavy load of 900 pound steers there at $135 for September 10th through 13th delivery. Sold them on the Superior Country page right there. Was going to put them on one of the sales, the Winnemucca sale, but his rep said, hey, why not just put them on this country page? And they did that. They barely even got them on there before somebody swooped them up. And those weren't really programmed cattle. I mean, outstanding quality. They like the influence and the carcass traits to them, but nothing that special from that. But 900 pound steers in the country way up there in Montana at $135. How about Clarinda Livestock Auction? Clarinda, Iowa, John Anderson there, 62 head, 824 pound steers, $141.85. And that's your feeder flash for Friday.